Welcome to the channel. Don't forget to like and subscribe. Today we're going to talk about the law of large numbers concept. Law of large numbers in insurance is a legal basis that plays an important role. As an insurance agent, we certainly need to know it well. There are many benefits from understanding the concept of the law of large numbers, which is a statistical principle and probability theory. In the principles of statistics and probability theory, the law of large numbers is a theory that will provide an overview of the results when someone performs the same experience frequently and in large number. This law states that the more samples used for the event, the closer it will be to the population mean. Based on the law of large numbers, the average of the results obtained from a large number of experiments can be close to the expected value, and this value will tend to get closer as the experiment is carried out more often. Therefore, the law of large numbers is important to ensure stable longer-term results for the random event average. At this point, it is important to apply the law of large numbers in the insurance world. Why is the concept of the law of large numbers so important for insurance companies? To answer that, you need to know the purpose of the law of large numbers. Because by studying the purpose, overall you can understand the law of large numbers in insurance. In simple terms, the law of large numbers aims to assist in estimating the value and frequency of claims that must be paid to clients or policyholders, as determination of the amount of premium paid cannot be done arbitrarily. Therefore, every insurance company applies the law of large numbers. This is because it can make it easier to estimate the value and frequency of claims. In addition, the law of large numbers can also make insurance companies predict the losses that will be experienced if more and more people take insurance themselves. Applying the law of large numbers in insurance means that future losses will match or approximate the expected losses, so that risk and uncertainty will be reduced. Meanwhile, the number of people who signed up for insurance will increase. The larger the person or group that takes insurance, the greater the loss according to the prediction of the group or person. This law is applied so that insurance companies can determine the level of mortality and morbidity of the person or group who takes the insurance product. Meanwhile, in practical application, it will make it easier for insurance company to determine the right amount of premium for each client, thereby reducing risk exposure for insurance companies due to the number of policies issued in certain types of insurance. To understand its application, it is better to provide an example. The law of large numbers, for example, is needed in order to understand this law well in the insurance world. An example of the law of large numbers in its application is, for example, an insurance company is better off issuing 500 policies than 150 insurance policies. This is assuming that there will be a stable and independent probability distribution for exposure to losses. Another example, a health insurance company found that there are 5 people out of 150 people who have the potential to suffer serious injuries and require quite high costs for one full year. If the health insurance company only insures 10 or 25 people, then the insurance company will incur a loss. Ideally, there should be 100 to 120 people who insure, preferably 150 people who insure. That way, the losses that will be experienced by the health insurance company will be in accordance with its predictions and estimates according to calculations based on the law of large numbers. Therefore, 5 people who will experience serious injuries will be treated fairly well according to the issues taken. You can understand the concept and calculation of the law of large numbers in the example mentioned and how to apply it. Therefore, the law of large numbers is a basis for every insurance company in running their company.